Hey, what's good, YouTube? It's your boy Will coming back with another update video. As we did see today, was a red day for AMC. However, it wasn't all bad. It just means it was offered to us at a lower price, right? So you remember, it's all a psychological thing and how you choose to see things in perspective, especially when in the stock market. Red days are not bad days. They're just better buying opportunities for you moving forward. Because again, why would you buy it at a higher price when you can buy it at a cheaper price? The whole purpose of the stock market: buy low, sell high. But nonetheless, looking at the open market, as you can see, there is some green out there. A lot of the whales, Microsoft, Nvidia, Adobe, did have green days. Specifically for us here in the Russell 2000, as you see, it is significantly a lot more red. Very few sectors within the Russell 2000 have green. Some are almost totally red. For example, financials, like this is almost perfectly red, right? So obviously, if this ETF is one of the biggest holders of AMC stock, that is going to negatively affect AMC stock overall. So just keep that in mind. Furthermore, this triangle we had identified yesterday or pointed out to you guys. Obviously, we did break through that trend line that we did identify as of last week. So now we are no longer in this triangle. That is completely gone at this point. So we either tomorrow can bounce back and start another trend, or identify a new trend, which is what we'll be on the lookout for, or the price action will do something totally different. Based on some of the deep dive into the options chain, as you guys did see yesterday, we did have 101,000 call option contracts in the money. That number has significantly decreased since then. And I'll just go ahead and show you guys. We've gone from 101,000 option contracts in the money to down to 36,000 contracts in the money. So obviously that's going to make a bigger impact heading into next week as well. Looking at the puts and calls today, we still did have more calls versus puts, with meaning more positive sentiment versus negative sentiment, but nonetheless, it did break us out of the triangle we wanted to stay in. Again, because normally what will happen in a situation of a triangle, as I did explain to you guys yesterday, we would have hit this tip of this triangle and expected a rip to the positive side, right? Now that we are out of it, either we form a new one or we form a new trend line and continue our run up, kind of like we did over here. As you see this trend, if you would have drawn a line from here, this was a trend. They're easily identifiable once you figure out how to see them, or how to visibly see them. It's a lot more easily identifiable. Again, it takes practice. So when you guys are looking at your charts, don't be afraid to draw some lines and try to see if you can guess the price action. Someone did ask me, why does it always have to be candles? I forgot to address that yesterday. It doesn't. You can always choose to do line, kind of like Robinhood does. You can do area, which gives you a lot better. Again, it's the touch points make it a lot more easily visible to see if you were to draw lines on the chart. But my recommendation would be draw a line on the chart, see if you can figure out, see if you can see it, see if you can follow a pattern or a trend. That's honestly the only way you're going to ever really get good at identifying charts. It's all a matter of preference. For me, I like to stick to candles or hollow candles, because again, I want to see what's buying and what's selling. That to me has more significance than anything else in a trading action of a day. Because again, if you have a lot more green, obviously there's a lot more buying. It's clear, it's easy as that, right? But to each their own, just something to practice and work on. I do have some positive news, or good news, to report on essentially. So Citigroup today did come out and raise their AMC price target to $5. They were previously at $3.70. In the MSNBC article I read, it also did state they had gotten rid of a put position that they were holding. I actually looked that up. Fintel, going in here, Citigroup, they had a put option. I don't remember the amount. I believe it was just a significant put position that they did now get rid of officially, which only goes to further emphasize that now more banks and financial institutions are bullish on AMC and the outlook, because again, the squeeze is still on, as we have discussed previously. But I wanted to end today's video because I know you guys get kind of down on red days. I know they suck. They're not the funnest. But again, it's all about perspective, guys. Like, it's psychological. Like, you got to remember, why would you want it? Why would you want to buy something at a higher price when you can get it at a lower price, right? I'm gonna repeat that forever and ever, because it takes time to fully understand that. It took me at least I want to say a good year to 2 years to get that mindset in my head that red days were not bad days. They're good days. That's when you should be buying, is on red days. You're supposed to be selling on green days because you enjoy the ride up, sell, and take your profit. Wait up for another red day, put your money back in, and you ride that wave up and down. Everybody wants to throw the money in, throw $1,000 in, cash out 50,000, and then be good. Well, you don't always have to make these enormous gains to be profitable in the stock market. You can easily throw 1,000 in on Monday, enjoy 2 green days or 3 green days. Here, I'll give you a better visual. You could have easily thrown your money in past Wednesday, enjoyed this ride up till Monday, sold, and then done it all over again until again we ended up in a red day, and then you buy a bigger position, or waited selling yesterday or the day before and then buying another position again on today's red day and enjoy it in the next ride up. That's small wins is what accumulates into mass wealth, right? It's not just one big home run hit. I mean, it's cool, don't get me wrong, it's cool to throw 1,000 in and cash out 100 grand. That's awesome. I don't think I know a person that would not agree to that. That's an awesome way to trade, right? But we don't always get that lucky. Specifically with AMC, this is a buy and hold play because the longer we hold, the more expensive it is for the hedge funds and the institutions who are short on AMC to pay for it. Because again, everything is on loan. They're paying a loan rate for having those shares on loan and shorting them. So it's costing them money, which is why it's so advantageous to us on the retail side, buying and holding. It doesn't cost me anything to hold my shares. All 2,200 of my shares cost me $0 to hold. Yeah, the price goes up and down. And yeah, nobody likes a red day because you don't like seeing your accounts go red or negative, $1,000, $2,000, $3,000. However, that's why we do the research, and that's why you pay attention to the things that I've tried to teach you guys, so that you kind of get the level set in your mind. Well, it doesn't really matter, right? So let's look at the performance from the year. If you were part of AMC essentially in January, and let's say you started with a $2,000 investment when you threw it in, as you see here, year-to-date performance, 1,495%. Well, 1,495% times those $2,000 is equivalent to $29,900 today. I can afford a week of red days, a month of red days. I don't care. You know what I mean? Like, it's you have to think of the strategy in the trade. And the strategy in my trade is I'm betting that these people who are short on AMC are going to have to cover because they can't hold it forever. It's not even their money to hold forever. This is their clients' money that they're shorting or using to short AMC to provide them returns, which, as we can see clearly from the chart, we're winning. They're not the ones up 1,400%. We are. Even in the last 3 months, 167%. Let's say you just picked this up, or you just started figuring out, or I just recently talked to you and you're like, you know what? He's right. I'm going to try it. Threw $1,000 in. At 167%, you're up $1,670. I mean, that's a $6,700 or $6,070, $670, excuse me, I can't speak today. $670 gain in 3 months. Again, the numbers don't lie. Like my video alluded to the other day. Numbers don't lie. They just tell you a story. It's just what kind of story they're going to tell you if you can see it and identify it, right? So don't take the red day so bad. Again, it's just a better buying opportunity at a better price. And that's the way you got to see it. And as long as you can start to engrave that in your mind, the more profitable you will be in the long run when this is all said and done. Because the day this moons, I promise you, people's lives are going to change, especially for those that are holding extremely large positions. Because as I showed you guys before, all these short positions in the millions and millions of dollars is 427 million, 476 million, 18 million. What was the other large one? 805 million. This amount of money is getting transferred from these institutions to the retail holders that have been holding this share of this stock since January. Even if you just joined a month ago or a week ago, this money is getting transferred to you based on the amount of shares you're holding. And that it's going to happen, it's going to happen. GameStop has proved that. Volkswagen squeezes prove that. There have been multitude of squeezes that over time have proved that when a short position, a large, abusive short position is identified on a company to try to bankrupt them, and it's caught, and retail steps in to save the day, retail always wins. Again, simple as this. We could play this game, let's just say it goes a year. They can't afford to hold a short position of this amount of money tied up for a year. It's not possible. Again, they have to produce returns for their clients. They have quarterly and annual reporting. Most hedge funds produce gains of 5 to 10% a year, and that's something that's considered outstanding. So just imagine like where they're sitting at. I guarantee you they're shitting their pants. I don't even have to ask. I know. Because if I was a short and I was down $805 million in the hole and counting, and no one is selling and all these retail people are still buying, that's something to be terrifying. Because that is something that can bankrupt the hedge fund. But again, I wanted to leave you guys with a positive note so that you guys don't take the red days so bad. I know a lot of you guys don't like it. Again, eventually with time, as you develop psychologically to understand red days are not bad days, those red days are less and less as effective on you. And you start to see it's just a better opportunity for me moving forward. But anyways, guys, I'll leave it at that. Please don't forget to like and subscribe to the channel, as it does help with the YouTube algorithm. Remember, you can look me up on IG or Twitter for other stock news. And if you have any questions, as always, leave them in the comments and I'll get to you, or I'll make a video about it so I can help you. Anyways, catch you guys in the next one. Deuce.